Algorithmic trading platforms offer a very specific promise: speed, precision, and automation. Systems like the K&M Delta bot are powered by the Titan V2 engine. The Titan V2 engine is a proprietary algorithmic scanner that uses deep learning to identify potential market setups faster than humanly possible. But that sleek, automated exterior hides a hostile environment. The cryptocurrency futures market does not care about your algorithm, and it does not forgive mistakes. The trap is remarkably common. Traders connect their real Delta Exchange API keys, the unique alphanumeric codes that allow a bot to execute trades using your actual capital, expecting a hands-off money printer. They hand over control to a high-speed engine without understanding the physics of the racetrack they are entering. The primary hazard of this system is extreme leverage. Leverage is a mechanism that allows you to multiply your buying power by borrowing funds from the exchange. While marketed as a tool for multiplying gains, in this specific environment, leverage acts as a ruthless liquidation accelerator. To survive here, you have to discard the fantasy of passive income. Operating the K&M Delta bot requires strict mathematical discipline before you ever turn the key. The system operates on the K&M Delta risk matrix. The bot automatically maps extreme leverage configurations to different asset classes based on their historical volatility. This chart shows how leverage interacts with asset pricing. For major pairs like Bitcoin and Ethereum, the bot supports a 200x leverage zone. At 200 times leverage, a microscopic 0.5% move against your position means your initial margin is entirely wiped out. Moving down the matrix, high-volatility altcoins like Solana and XRP are placed in the 100x leverage zone. These assets naturally experience rapid, erratic price swings. When you apply 100x leverage to an asset that easily moves 2 or 3% in minutes, you trigger algorithmic liquidations almost instantly if caught on the wrong side of the trend. Finally, standard altcoins like AVE and PHL sit in the 50x leverage zone. Here, the specific danger is slippage. Slippage is the difference between the expected price of a trade and the price at which the trade is actually executed. In these lower liquidity pools, exiting a highly leveraged trade can force your order to fill at significantly worse prices, accelerating losses. The underlying math of extreme leverage leaves zero room for hesitation. The structure mathematically guarantees one of two outcomes: a massive percentage profit or an immediate total liquidation of your margin. The bot's decision-making relies on AI confidence scores and market context analyses, categorizing the market into trend, erratic phases like chop, or a volatile squeeze. But these are purely technical, algorithmic data points. They are not guaranteed financial advice. The system operates on the uncompromising principle of execution finality. The moment the bot automatically enters a trade on your behalf, you own the financial outcome entirely. To protect your capital, the bot relies on a continuous, unbroken background connection to the Delta Exchange API. This invisible link is what allows the system to actively trail your stop losses and secure take profits. This brings us to the system's strict statutory warning. Logging out terminates your session on both Telegram and the web dashboard. The bot immediately loses control over any active trades, drops all automated risk management, and leaves your positions unmanaged. The Titan V2 engine executes its logic flawlessly, right up until the human pilot breaks the chain. A manual disconnection leaves your leveraged portfolio completely defenseless in the open market. Surviving the technical dangers of the bot requires strict adherence to human operational protocols, the golden rules. First is the capital rule. Because trading deals strictly in probabilities and not certainties, you must never risk capital you cannot afford to lose. Second is the performance fallacy. The bot's dashboard may display high win rates and impressive historical returns in its closed trade section. However, past performance provides absolutely no guarantee for your next live execution. Third is the ownership principle. The K&M Delta bot automates the mechanics of how a trade happens, but the human user is legally and financially responsible for what happens. This diagram shows the system's dedicated paper trading mode. Paper trading is a simulated environment that lets you execute live market strategies without risking actual financial capital. The system treats this as the ultimate safety net and a strict prerequisite before you ever bind live API keys. Respecting the mathematical realities of leverage, starting in a simulated environment, and accepting total personal liability are the non-negotiable costs of operating this engine. That is how you survive the Liquidation Accelerator.